Hello my friends, this is Angela McCoy and I am back with some more powerful information that you need to know. Why? What are we after? Financial literacy. And today I'm going to do a quick video on 3 terms that kind of mix people up sometimes. I know they had me a little confused, so we're going to do a basic overview of exemptions, deductions, and credits. Oh my, yes, what are these and what are the difference between them? So we're going to do a quick overview of that. Let's start off with exemptions. Exemptions, also known as allowances, are dollar amounts per person in your household, get this, that you are allowed to subtract from your taxable income, lowering the amount you're taxed on. It is determined by 2 things. 1, your filing status, which can be single, married filing separately, married filing jointly, qualifying widower with dependents, or head of household. Note for head of household, this is only for the unmarried who have paid more than 50% of the cost of maintaining a home for themselves and a qualifying person or persons, meaning children, elderly parent, or someone else that you are taking care of. You cannot be head of household and married. This is only for the unmarried. This is not like church where I'm the head of the house. No. This is for the government, and this is only for single people with dependents. The second thing that your exemptions are determined by is the number of dependents you have in your household. Note, for 2016, each exemption is worth $4,050 per person. Now, let's talk about deductions. A dollar amount that is also subtracted from your taxable income, thereby lowering the amount you're taxed on. However, it comes in 2 forms. You've got your standard deduction, and this is a dollar amount that reduces your taxable income on which you're taxed and varies according to your filing status. People without a lot of expenses generally file standard. Now, for 2016, the standard deductions are single, married filing separately, $6,300. For married filing joint, it's $12,600. And for that single head of household, it's $9,300. Those are your standard deductions. Again, if you don't have a lot of expenses, you generally file standard deductions. Now, there's also something called itemized deductions. Itemized deductions are individual items like medical or dental care, state and local taxes, mortgage interest, charitable contributions like tithes, offerings, donations, educational expenses, and business expenses that can be deducted from your taxable income. The more itemized deductions you have, the lower your taxable income, the lower your tax, the lower the amount of money that you're actually taxed on, as long as you keep good records, because you do not want the IRS bothering you. All right, what's a tax credit? The government may grant a tax credit to promote a specific behavior, such as replacing old appliances with a more energy efficient one, or to help disadvantaged taxpayers by reducing the total cost of housing. It is an amount of money a taxpayer is able to subtract from the taxes owed to the government. Unlike deductions and exemptions, which reduce the amount of taxable income, tax credits reduce the actual amount of taxes owed. So tax credits are more favorable than tax deductions or exemptions because tax credits reduce the tax owed dollar for dollar, while a deduction or an exemption will reduce the final amount of taxes owed. They only do so based on an individual's tax rate. Most tax credits come in 2 forms. You got the non-refundable and the refundable. Now, what's a non-refundable? Non-refundable tax credit are items directly deducted from the amount of taxes you owe until the amount is reduced to 0. An excess non-refundable tax credit is not utilized, as an amount that would potentially reduce the tax liability further is not paid out. Non-refundable tax credits negatively impact low-income taxpayers as they are not often able to utilize the entire amount of the credit. Non-refundable tax credits are valid only in the year they are reported, expire after the return is filed, and may not be carried over to future years. As of 2016, specific examples of non-refundable tax credits include benefits for adoption, raising children, earning foreign income, and paying mortgage interest. Now, what's a refundable tax credit? This is the most beneficial tax credit because they are entirely refundable. This means that regardless of a taxpayer's income or tax bill, he is entitled to the entire amount of the credit. This is true even if the refundable tax credit reduces the tax bill down to zero, indicating that the taxpayer is due a refund. As of 2016, the most common refundable tax credit is the Earned Income Tax Credit. Other refundable tax credits are available for education, healthcare coverage, and for raising children, to name a few. Now, let's do a quick recap. Number 1, exemptions, also known as an allowance, lowers your taxable income and is based on the number of qualifying people who live in your house and your filing status. Number 2, deductions also lower your taxable income and come in two forms. You've got your standard for people who don't have a lot of expenses, and you got your itemized for people who do have a lot of expenses, and particularly people who own houses. Number 3, credits, used by the government as an incentive to promote certain behavior. Unlike exemptions and deductions, which lower your taxable income, credits lower the taxes that you owe. It can be non-refundable, meaning you won't get a refund, or refundable, meaning you get what's left after your tax bill is settled. There you have it, ladies and gentlemen. That's just a quick overview of exemptions, deductions, and credits. If you are interested in more detailed information of these terms and others concerning your taxes, feel free to go over to the irs.gov website. They have a myriad of information over there, pretty easy to understand. And if you run into something you don't understand, feel free to give them a call and ask some questions. Why? Because you need to know this information. What are we after? Financial literacy. Now remember, like and share this video. We got to get this information out there. And also go on over to Facebook and like I am A.K. McCoy. If this was some value to you, please go ahead and like that page. I am A.K. McCoy. If you're interested in mastering your money or fixing your finances, then get in touch with me at 302-316-0369. That's 302-316-0369. Again, this is Angela McCoy. That's my story. I'm sticking to it. I have more powerful information that you need to know in future videos, so keep an eye out and be blessed.